Hey everyone, welcome back to Corporate Decoder, the place where we decode the often confusing world of corporate filings. Today we're diving into a semi-annual report for Voyager insured funds. But don't worry, it's not about cruises or exotic destinations. Instead, it's about municipal bonds, those things that help fund local projects like schools and hospitals. So buckle up as we uncover where the money is and what's going on. These funds aren't investing in tech startups or the stock market. They're focusing on something a bit more, well, insured. We're talking about municipal bonds, debt issued by cities, states, and other local governments to finance their operations. Think of it as lending money to your town with the promise they'll pay you back with interest. These funds are registered with the Securities and Exchange Commission, which means they have to share all their financials, their investment details with the public. Now, each fund has its own little world, and today we are going to take a quick tour on the Macquarie Tax-Free Arizona Fund, Class A, ticker VAZEX. This fund invests in municipal bonds, specifically in Arizona. This report is for September 1, 2024 to February 2084 to February 28, 2025. First, let's talk about expenses. It's like understanding the fees on a credit card. For Class A shares, the report states that the costs paid as a percentage of a $10,000 investment is 0.85%. Now, what does that mean? Well, if you had invested $10,000, you would pay about $42 in expenses. It's important to keep an eye on these expenses because they eat into your returns. Now for the fund's stats, here the total fund net assets amount is a little over $58 million. The fund has 79 different investments in its portfolio, which is a pretty good diversification. And advisory fees, around 50 RD1 were paid out. Another key number is the portfolio turnover rate, which is how often the fund changes its investments. Here it's 4%, meaning that during this period, the fund sold or replaced only a small portion of its holdings. Where exactly is the money being invested? The biggest chunk, 28%, went into education revenue bonds. Think of these as bonds that help finance school projects. Healthcare is next at 21.67%, which would cover building or improving hospitals. Then there is special tax revenue bonds at 15.78%, and electric revenue bonds makes up 10.67%. The rest is scattered among things like transportation, local obligations, and leases. Now this is the Arizona fund, so naturally 80.5% of the money is invested in Arizona, followed by Puerto Rico at 16%. Next up, we're switching coasts. It's time to talk about the Macquarie Tax-Free California Fund, Class C ticker WRCX. The cost is around $79 for a $10,000 investment for Class C. The numbers here are a bit higher than the Arizona fund. It has around $321 million in net assets. And the advisory fees are also higher at $50,681. And the portfolio turnover rate is 4%, the same as with Arizona. How's this fund allocate its funds? 18.44% goes to education revenue bonds. Electric revenue bonds follow at 4.67% and healthcare clocks in at 14.62%. And what about the geographical allocation? What do those numbers look like? Well, this one has a huge focus on Arizona 80-50% with Puerto Rico at 16%. The remaining small allocation goes to the US Virgin Islands with 0.55%. And one last example, Macquarie Tax-Free Colorado Fund and their institutional class DESEX. Wow, the cost here is low, only $30 for each $10,000 invested. The fund net assets here are at $58 million TAFI. Total number of portfolio holdings are 79, same as the others. And again, the portfolio turnover is the same at 4%. And what about this fund's allocation? What numbers does it follow? The biggest amount went to education at 28.01%, healthcare at 21.67%, and special tax revenue bonds with 15.78%. And again, what about the location? 50% of this fund's allocation is Arizona, 16.6% Puerto Rico, and 0.555% for the US Virgin Islands. It also has an appendix defining what RGM means. Assured Guarantee Municipal Corporation. Let's go through the statements of assets and liabilities. Here we can get the bigger picture with all of the assets and liabilities, and we'll skim through a couple of interesting points. The total net assets for the tax-free Arizona fund is $58,000 and $58,000 and $58,000 and $58,000 and $58,000. The Colorado fund has a total distributable earnings loss of $5,805. Note that this is a negative number showing an accumulated loss. These financial statements also include a section on statements of operation. They detail all of the income loss distributions and what is going on. The Arizona Tax-Free Fund financial highlight indicates that the total return was zero expenses, 0.85%. If you put those two numbers together, it would be a smart idea to look at how these numbers compare against similar options in the market. It looks like all of the data is displayed right here. These financial highlights give a clear picture of where the money comes from and where it goes to in this fund. Finally, the report includes information of contact info. Ted now putting it all together. What can we say about these funds? Well, it looks like a lot of the money, specifically for the Arizona, Colorado, and California funds, are being targeted in the Arizona region, more specifically for their healthcare and education. We should be mindful, however, of their bond allocation in Puerto Rico, which may bring about questions to their overall fund strategy. Additionally, there may be concern with their investment performance given the current expense ratios. With more data and comparison, these would be easier to gauge and make a more informed decision. Overall, the Macquarie funds offer a way to invest in municipal bonds. It's essential to look closely at the details, particularly the fees, investment allocations, and what financial obligations there are, if any. It gives insight into where your money's going and what you can expect in return. Thanks for tuning in. Make sure to like, comment, and subscribe for more Corporate Decoder.